You will never find a more optimistic trader than Alan Knuckman, the chief market strategist at St. Paul Research. What do you have to tell us this week with your Trader Talk?
Hello again, Angie. Things looked so good last week. Now we're seeing a failure from that 4,500 level in the S&P. Checking to see if we're going to get a new test and hopefully a reject of these 2022 lows.
Alan, what are your words of wisdom as some traders out there are trying to handle the churn in the market that's been going on, especially as you're watching your own positions?
All right, current trades, it's still all about the macro market now. This is why we trade the in-the-money options with plenty of time. What we're seeing is a stock and bond dive. That never happens. That's not normal, so we'll have to let the market sort it out. And the key is to have enough time to do so.
For your trade this week, you're going into the bond market. Tell us about your trade trigger.
All right, this week's trade trigger, it's the HYG. It's the high yield bond ETF. Now, I trade whatever the best chart is. And looking at this, we've seen bullish divergence, a big drop. It's dropped from 88 down to 80. Now, this 80 level is a critical level over the last 10 years. It's traded between 60 and 100, so the midpoint's 80. And then over the last 5 years, it's traded between 70 and 90, so the midpoint's 80. So we're leaning on a very critical level here. So right now, it's been trading here between 80 and 84 for the last few months. So we'll see if it can make another boost up to just the top of that channel. I'm looking at the January 75 call, a deep in the money options, trading for about 5 right now. It's the break even on that's about 50 cents higher, expiration break even. And again, January, let's remember that January is a long ways away, 9 months of time there. So again, the modest move back to the top of that channel, this option will perform very well.
What are your trading day takeaways?
All right, let's talk trading takeaways. So third time's a charm is what I'm looking for here after this test for the third time of these lows. We'll see how things go for the next week or so. So that gives me 3 things to watch on my list here. So trading takeaway number 1 to watch, that the fear is still flat, that the VIX is nowhere near the highs, even though we are getting close to testing those lows. And that's happening with 30% of the stock right now, only 30% of the stocks above their 200-day moving average. The only other time that it's been this low in the percentage of those stocks off is with those last extreme lows in the S&P. Number 2, price print. We have to focus on price, not sentiment. So all eyes are on this 4,100 low. Are we going to be above or below on a weekly basis? And that'll be our key. Number 3, buy the dip bounce. That's what we're not seeing. We've seen how the markets have turned to be selling all the rallies. For my bullish bias and my risk reward at these levels, I need to see a surge, hold, and follow through. That would change the naysayers' negativity.
That's what I love about you. You stay away from that negativity. Thank you, Alan.
Thank you.
Go to businessfirstam.com for where to see our show on TV.